Okay, I think it's the right time. Good morning, everyone who's joining from the YPO Art Network. My name is Armando Beltran, and I'm very pleased to welcome you to our second series in this webinar with Anita Heriot. The first thing I need to ask everyone is to please mute your phones. While the process, the logistics for today will be, I'll be introducing Anita in a second. The next thing is we're going to go through this presentation discussing our collections or YPO's collections as a financial asset. That will last around 20-25 minutes. And then I'll probably be asking some questions to Anita, having some dialogue with her. And I would ask everyone who wants to ask a question, you can either put it in the Q&A in the chat, and I will be reading and moderating. And depending on, in the end, how many participants live we have today, we might engage in a broader dialogue. And I'll be admitting people as they join. To start, let me introduce again Anita to everyone. Anita is president of Pall Mall Art Advisors, which is a tangible asset management firm. She is a nationally sought after speaker who has lectured at the Barron's 100 and 500 summits to over 30 chapters of Tiger 21, which I'm sure many of you know is a high net worth learning network similar to YPO. She's also spoken to YPOers before, both in the Personal Investment Network and recently in the Art Network. And to many others, bankers, attorneys, insurance specialists, accountants throughout the US mainly. She is a member of the Appraisers Association of America and certified to the Uniform Standards of Professional Appraisal Practice. She has testified as a specialist witness in major court cases involving art valuations, and she regularly lectures on topics relating to art, collection, and appraising. Anita grew up in a family of art collectors, so she's very familiar with the subject. She's a graduate of Bowdoin University with advanced degrees from the University of London and New York University. She started her career at Sotheby's in New York City, and after spending several years as an independent appraiser, she joined Gurr Jones as an appraiser in the New York office. Prior to starting Pall Mall Art Advisors, Anita ran both the British and Continental Furniture and Decorative Arts Department and the Appraisals Department at Freeman's Auctioneers. She has appeared on several TV shows and is frequently interviewed by the media for her insights into the art world. But probably most important, she did a fantastic job last time, 2 weeks ago. And with that, we're very grateful for her. And with that, Anita, I would ask you to please just take us through your presentation and let's have a real fun and interesting and engaging conversation.
Thank you so much, and thank you for that tedious introduction for all. So I think we're going to have some fun today. This is what I think we should focus on. The first thing is I want us to just, from our last presentation, we were looking at primarily the impact of COVID. So let's find out what the state of the market is since we last spoke, because there have been some developments. The next thing, which I really do think is the most important focus of this talk, is I really want us all to think about if you are acquiring a work of art and it is part of your portfolio, if in fact you do see it as an asset in your larger portfolio, then how do you actually determine if the work you're buying will either hold its value, go up in value, or have a strong asset value within your portfolio? Because we're talking about it from a financial perspective today. And the last thing we're going to do is talk about some of the financial opportunities. One always sees art collections as quote unquote illiquid. And over time, there's been kind of a broadening of the opportunities around our art collections. So we're going to look a little bit at some of those opportunities for liquidity, et cetera. So without further ado, let's get started. I'm just teasing you with this Kusama, but we'll be talking in more detail in just a moment. Okay. All right. So the first thing I want to talk about is what's happened to this art market. Why has the art market become such an important asset class? Why are there now art funds when there weren't art funds in 2006? Why do we have art bonds? Why are there art clubs? Why has the auction market increased so substantially? And for most of you who are business owners and involved in finances from a business perspective, you saw major changes, I assume, after 2008 with the major recession. And I want to talk about what happened with the art market, because we really do use 2008 as a pivot point in the art market as it takes us right up to today. So the first thing I would state is that, when the recession hit, we were all pretty sure that the art market was going to contract quite significantly, as I'm sure you can understand. I was working in an auction house at the time, and we actually had a room called the glass room of sadness where people went into the room and they were fired. So from about 3 months after the recession hit, about 30% of the overall auction staff globally were fired, with assumption there'd be a great constriction in the art market. But we saw the exact opposite. So while we anticipated people to stop buying luxury goods, what we actually saw was an incredible increase in the marketplace. So I quickly want to talk a little bit about why this happened. Why did we start seeing these as huge assets? The first thing is, who were the buyers after 2008? So looking into 2010, 11, 12, up to today, who were the buyers? Well, the first thing I would tell you is that we saw dramatic change in the acquisition power of the BRIC countries. And I'm sure you're all aware of who those are, right? Brazil, Russia, India, China, and the Middle East as well. So not for the first time, but in a strength that we had never seen before, we saw huge participation globally in acquisition of these assets. Now, the question is why and how? Now, if we were to go all the way back to when I first started working at Sotheby's in, hate to say it, 1990, when I was just a wee lass, if you actually wanted to buy, a Picasso in 1990, the only way to do it was to actually take a taxi up York Avenue, get a paddle and bid. Or you could call on a rotary phone and hope that someone answered the phone. So the only way to access auction material in 1990 was basically to be there. And therefore, the centers of the art world, the United States and London primarily. Now, let's talk about what happened in 2009, 2010, and up till today. If you would like to buy that same Picasso that someone might have wanted to buy in 1990, all you actually need is a laptop and a finger and a bank account. So what does that mean? That means that if you are residing in Shanghai, if you're residing in Buenos Aires, it doesn't matter. You have the same access to these assets as anyone else in the world. So with a great desire to acquire the assets, and then with access to the assets, we saw incredible universal participation in the acquisition of important fine works of fine art. Now, what kind of art were they particularly interested in buying? We saw in particular a focus on what we call blue chip assets. And blue chip essentially means artwork, artists that kind of change the way we look at art history, the kind of the fathers and mothers of art history, the pivot points, the catalysts. So we saw great participation in the market, and then we saw a desire to acquire blue chip assets. And as a result, the way auctions work is through competition. So the more people that want something, the higher the price. So you can see how this all works out. As a result, we saw a huge increase in prices for these blue chip artists, okay? Now, this is just one slide from last week so that we can kind of see where we are today in case you weren't on the call last week. So after this second recession, quote unquote, with COVID, we did see a real contraction of the market. The contraction's primarily due to supply. That was not the reason for what we saw in 2008. The issue here is access to auction venues and some fear of selling due to the fact that there was this fear that maybe the prices would go down. So post-war contemporary continues to reign supreme, but there has been a contraction in the market, meaning not as many pieces are coming up for sale. That being said, we are seeing dynamic and vigorous interest in, again, those blue chip assets. So blue chip assets continue to reign supreme in this market today. That being said, all of the artists that everyone was dying to buy from 2011 to 2015, which we would call kind of emerging artists, that market has contracted quite significantly. So this is a very interesting chart because it's going to really give you insight into how global the market has become. If you were to show this same chart, in 2000 or 2001, I can assure you 100% that 90% of the people looking at that chart would not know half of the artists who are the most globally traded artists today in 2019. So if we look at Zhao Kai and Chang Daqian, et cetera, no one would have known who those are. So the first thing to note is that the Chinese market is still extremely strong. And there's a real desire to acquire artists that are either what we call kind of the Picasso, like Chang Daqian, right? Or post-war contemporary artists like Zhao Kai. In addition, if you note this list, it's a very interesting list because each one of these artists are the pivot points in art history. So when you're looking at asset, and Paul Mall has developed the top 100 artists that we think are the best asset acquisition artists. But if you note these top 10, you will note that all of them kind of are the catalyst for change, right? Pablo Picasso, the catalyst for change and abstraction, right? Claude Monet, one of the catalysts of change for Impressionism. Andy Warhol, catalyst for change for pop art. So, and so on and so forth. So there's still a great interest in blue chip artists that have changed the direction of art history. Now, I thought this is going to be the beginning of what I think is the most important part of this entire presentation, which will help collectors to think about the artworks they own, but also the artworks they're going to acquire. So I'm just going to quickly show you two works of art as just kind of an appetizer for us to discuss how do you actually acquire asset value artwork. So the first, and I'm highly biased, so I'm going to focus on some artists that I think are very important in the market. As you know, David Hockney is still alive, but he's quite elderly. And this is an example of one of his Pool series, Pool on a Cloudy Day. And this work sold in 2020. It's part of his paper pulp series, and you see it sold for $5 million. This is a work that sold in 2018, also part of his Pool series, an oil on canvas, portrait of an artist, and the most ever spent for a living American artist. And this was a $90 million sale of this particular artwork. So let's go to the question. Both are Pool series, right? Both are by David Hockney. Both are large scale. Both are very important, but one, as you can see, sold for $5 million, and one you can see sold for $90 million. Now, I'm not suggesting that all of us take out our pocketbooks and buy a $90 million artwork. What I'm suggesting is that there are what I call categories of analysis that are the determinant factors of value for an artwork. And it doesn't matter if you're spending $100,000 or $90 million, you still need to look at these categories of analysis if you want to acquire an artwork that is asset value with lasting value with potential growth. Just like you would with a business, just like you would with a piece of real estate, you have to look at your categories of analysis. So let's look at our categories of analysis. This is an example of a George O'Keeffe, just It was actually sold at Sotheby's in 1994 for $1 million, and in 2014 it sold for $44 million. Again, I'm being highly biased and focusing on some artists that I think are extremely important and really good acquisition opportunities. But what I mentioned in our last call was this idea of the ABC rule. And I think this is a crucial way of thinking about the artworks you're going to buy as a financial instrument. Now, I'm going to take you through most of these categories, and I'm hoping that as we start going through these categories, you start thinking about your art collections. Think about what you own. And also, as the auctions are about to happen in October and November and December, when you start thinking about what you might want to acquire at gallery or auction, use these categories of analysis. Now, this George O'Keeffe falls into the category of an A-level work. And as we go through this, by the end, I want you to be able to identify an A-level work, okay? So let's start with the first category. Why does an artist actually matter when we acquire a work of art? When we say the artist matters, it matters in two ways. One, ask yourself the following question. Does the artist have a secondary market? Do they sell in the auction marketplace? If the artist does not sell in the auction marketplace, then there's only one exception to them being an asset value work, and that is they must be represented by the handful of important gallery market makers. So if, as a good example, the second thing I want to point out is how have they contributed to the development of art history? So this is a great comparison of three artists, and each one has a different asset value. The first, and they're all beautiful works. The first is a living artist, and her asset value is $500. The most, I would say, her asset value is $500. She sells for about $5,000 in retail. She's a beautiful artist, just lovely work, but she has zero secondary market. She doesn't have a strong exhibition history, and she's not represented by a major dealer. So those are all, if we were to value, you know, that would be like C or D. Now, she's not a D person, but if we're looking at it from a portfolio perspective, that is not a good asset acquisition. The second is Grace Hardigan. Now, anyone that follows abstract expressionism and females who are very important today in the market knows about the Denver exhibition that featured the development of abstract expressionism for women. Grace Hardigan was in that exhibition, and Grace Hardigan was actually friends with Helen Frankenthaler. She hung out with all of the important abstract expressionists in New York. Now, this Grace Hardigan is from a good date, right? It's from the 1950s, and it has an asset value of about $100,000. The third example is Helen Frankenthaler, and again, Grace Hardigan and Helen Frankenthaler were colleagues, and this particular Helen Frankenthaler has an asset value of $2.8 million, also painted around the same period. So how can you have three artists, all abstract expressionists, and each with a completely different asset value? The main reason is the following. Helen Frankenthaler has the strongest secondary market, one. Two, Helen Frankenthaler is represented by the most important galleries globally. That's the second reason. The third reason, which is more important, is Grace Hardigan started as an abstract expressionist, and then her kind of style grew and developed over time, and she kind of morphed into another kind of subject matter, form, etc., and moved away from abstract expressionism. Helen Frankenthaler stuck to abstract expressionism, and it just became more mature and developed, and hence Helen Frankenthaler really became one of the pivotal abstract expressionists, and Grace Hardigan is kind of what we call kind of a second tier abstract expressionist. So while $100,000 is a lot of money, it probably wouldn't be the best asset acquisition, unlike a Helen Frankenthaler. Why does medium matter? So medium is basically what it's made of. We all know that, but I just want to give you a quick example. So here's Warhol. We all know who Warhol is, very important. So the artist, correct, right, in category of analysis. Size, quite similar, correct. that's the same, right? Subject matter, the same. So all of these categories of analysis are the same except for the medium. And the question you ask yourself is, what is that category of analysis that can change the value of the object in a positive or negative way? In this case, it's the medium. So as you can see, this print it sold for $1,100, and this acrylic and silk screen sold for $3.8 million. So the medium is extremely important in your analysis, and this is kind of a hierarchy of mediums. Now, of course, when we're looking at other kinds of like technology, right, as an example, or sculpture, then these mediums don't necessarily work. But for 90% of artwork, the more valuable the work, the more original the work. Right? And that's quite obvious, with oil and canvas acrylic kind of being the penultimate medium. Size. I wanted to give you an example of a Zhao Qi, a very important artist, probably one of the most important artists today, and just to kind of impact of size on an artwork. A very small artwork by a very important artist will always be limited in the value for overall long-term growth. And that is the category of analysis in this case that has the devastating impact on value. So for this Zhao, and these are from the same period, right? The real differences in size, I actually find the one,
we don't need the,
I actually find the smaller one more aesthetically appealing. So the 7.6 sold, I think someone has their sound on.
I already did. I'm asking everyone to be in mute, and so I'm muting manually. Okay.
So the 7.6 inches, as you can see, sold for $122,000, and the 45 by 64 sold for $14 million. So the size is that category of analysis. Back to Helen Frankenthaler, date. Date is so important, and so many of my clients are offered by galleries artists that are quite important and offered recent works with the idea that who cares the date as long as the artist is important, and that's absolutely inaccurate. So what we like to look at is the impact. What is that moment in art history when that artist came to fore and changed the way we look at art history? What was that moment? For Helen Frankenthaler, it was the 1960s with the emergence of abstract expressionism. Hence, on the left, in 2018, this beautiful work by Helen Frankenthaler, 1987, sold for $350,000. And in that same year, this also beautiful work sold for 1.1. And the only reason there's a differential in value is the date. Now, an artist I love, Diego Rivera, we also have to look at subject matter. So again, I have many clients who come to me and they say, oh, I have a Gauguin, I love my Gauguin, and I find it's an early landscape or it's an early, seascape. Until the end of days, a Gauguin early seascape will never be worth a certain level of value because we look at his Tahitian scenes as the most important. For Diego Rivera, as we know, his portraits, his incredible mural painting, his focus on the way people really lived, that's what's very important for Diego Rivera. Hence, this beautiful early seascape cannot achieve a high value because this is not why we buy a Diego Rivera. We buy a Diego Rivera because we want to look at his figures, particularly figures of kind of common, regular people. And these are both very kind of small scale works. Provenance. Provenance has such a big impact, and it has a huge impact on lasting value. It also can impact the price you pay. So I thought I would just give you an example of Thomas Moran, and he was known for his Western paintings, but also for his Venetian scenes. On the left, it's an entrance to Grand Canal. On the right, entrance to Grand Canal, except for the one on the right was owned by Peggy and David Rockefeller. That sale, if any of you ever want to look at the impact of provenance or ownership on value, check out that catalog, because seriously, little pieces of Meissen were going 20 times value simply because they were owned by Peggy and David Rockefeller. So to give you an impact, this one sold for $118,000 in 2018, and this one sold for $468,000 in 2018. Why? Because it was owned by Peggy and David Rockefeller. Condition. Condition is And this is an example of a work we were going to bid on last year. And it's one of those things that you can't see with the naked eye, but the impact on value is absolutely devastating if you don't know what you're dealing with. Also, to note, many auction houses will give you condition reports. So I'll give you an example. This Richard Diebenkorn, an artist who I think is incredibly important, is an early work. It's an important work. It's a big size. It's the right medium. I mean, it has everything going for it. We requested a condition report from the auction house, and it made it look like it was in, they said, overall very good condition. We did not believe that to be true. We brought in a third-party conservator, and based on that report, we ran away from that work. And the market reflected that because this work had one bid on it. That's it, even though it's an incredibly important work. And that's primarily due to the fact the condition was not good. So you must get a third-party condition report when you go above a certain value threshold, always. Sales history can also devastate a value. And this is the oldest trick in the book. I thought I'd give you a great example because we're buying Impressionist works and we are always looking for good Gauguins. And what the auction houses will do is this little move. This piece came up in 2011 at Christie's Paris and went unsold. And remember, I told you Gauguin landscapes, people do not, crave his early period landscapes. It went unsold. So you know what that means in the marketplace. 1.3 to 2 million really means that the reserve was probably 1.1. It still didn't sell at the 1.1. So the new value is probably something around 900,000 for the work. What people will do is they'll take the work, send it to another auction house with the hope that clients will not do their review and think that it's the first time it's come up for sale. It does not have a low and a high estimate. They're just estimating it at $1 million. So sales history can really, really impact a work in a negative way. So from a seller's perspective, you want to make sure you sell correctly. And that's a whole other lecture that we can do another day. But from a buyer's perspective, you must do your due diligence. So the moral of the story is that when all those boxes of categories of analysis are checked and you have an A+ next to each of those categories of analysis, guess what you have? A museum masterpiece. That's why people always say, well, I don't understand. How could a work have sold for $170 million? Because it's perfect. Everything is right about this work, and the market knows that to be true. Now, again, I don't think you should be spending $170 million, but you can still have positive check marks next to each of those categories of analysis when you acquire a work. I thought I would give you kind of a lower value example, since we're not all thinking about spending $170 million. I thought I'd give you a nice example of the David Hockney Yosemite series. You could acquire them at pace. They kind of controlled the estate. They were $25,000 each. Now, small edition. Remember I said David Hockney is, he's getting much older. He's probably the most important living artist today. For $25,000, you could have this particular one. And the most amazing thing is we bought quite a few of them for our clients when they came out. The most recent auction result was $51,000. That is so unheard of for a print that you could acquire at a gallery to have doubled in price in such a short period of time. So it doesn't have to be a $20 million work. You can still have those categories of analysis. Okay, so that's the first thing I wanted to talk about is how do you buy something with asset value in mind? Okay.
Anita,
now,
should we maybe open this for a few questions
course.
before we go into the second part? There's,
Totally.
and again, I'm going to remind everyone that you can please use the chat in the Q&A. There was one from Mark Adler about the Hockney you showed. Was that Hockney from the Evers collection? Do you know that?
So you mean the $90 million one?
Yeah, I think that's the one that he was asking.
Yes, and you can get online. You can get the full. I mean, there's a 4-page write-up on the work, and it was by it had all of the checks next to it because it was from a very important collection. It had never been to market. it was the right size, it was an oil and canvas, it was the pool series, it was a double portrait. I mean, I could go on and on why that was a perfect work, but the provenance was extremely, extremely important in its value.
Okay.
I think it was owned by David Geffen, I believe. I'm pretty sure.
Geffen, okay. Then Mark follows up with another question. What are your thoughts about fractional art ownership?
Oh yeah, of course. So that's actually going to fall into our financial section. Okay. But so I can explain right when we hop onto the next one. Are there any other related? And then I'll get right to the fractional interest question.
I have a couple questions on my own that I wanted to ask you, and let me go through those. The first one is there the possibility of the value that you place on some of the attributes that you just went through that might change over time? Let me give you an example. Maybe there's an artist that you value certain size, no, but then over time they start working, and maybe it's like, I'm gonna make it up, it's a living artist, David Hockney or whatever, and he starts at age whatever, I'm not sure how old he is, 90 years old. He starts doing some fantastic, very small pieces. Would that change the perception of value around that attribute over time? That's my first question.
Yeah. So what I would say is, generally speaking, a very small scale work will never have a huge value, no matter what. However, within the context of an artist's oeuvre and experience, and there's usually a direct correlation, and a good example would be the Hockney. When the Hockney was sold, it was the same time that the Tate had a huge retrospective of David Hockney. And we actually knew about the retrospective several years ahead of time, and we had planned for our clients to focus on Hockney knowing that. We just did an analysis yesterday of an important Jasper Johns, and we noticed that the values in 2015 had all gone up significantly, primarily because there were several important retrospectives of Jasper Johns. So my point is, if the works featured, those small little scale works, were featured as an important component of an exhibition with a lot of literary and academic analysis, it could impact the value. But again, it's not the size that's impacting it, it's the academic community and the exhibition that would impact it.
Okay, and then the other question, and there's two more, and then we'll go through the next
Sure.
part of the presentation. You mentioned, and you were comparing Daniela Schweizenberg with Helen Frankenthaler and Grace Hartigan, right? Let me ask you this. I sometimes see some gallerists and some art specialists that they start looking at, painters from a particular period, no? And then they discover, or they rediscover, someone that was not thought to be like a master, no? And then they say, you know what? It was fundamental, and then there's research, and then all of a sudden, and maybe that Daniela Schweizenberg that you said it was $500 and in retail 5,000, maybe after another decade, and then they go up. Is that possible? Is that something that you see, and how would you identify those?
Yep, I have a couple kind of points in that regard. The first is, and I don't want to be crass, but I will be, let's think about stocks. If someone says to you, hey, I have a penny stock, it's very inexpensive. And when you buy something like a penny stock, or you buy a stock in which there's no traction for the company, you're just a gamble. It could happen. It probably won't happen, but it's a gamble. For someone like that artist, we would look for a couple things. Like a living artist, we need to see that museums are acquiring her works. She may have no secondary market, but are museums acquiring her works? Are major collectors of substance collecting her works, even if she has no secondary market, right? Is she featured in any of the literature, important literature, as part of a movement? We see a lot of kind of what Grace Hartigan's a good example, kind of artists that didn't quite make it, but were part of a movement of significance. So it's a huge gamble. The chances are almost zero. But, when I have clients that say, you know what, I want to support living artists, and I don't mean, artists that are kind of in my region, say they live in Portland, and like, I want to support our artists in Oregon. Then I say, that's fine. if your entire budget is $1 million, we're going to take $15,000, and that's the charitable portion of your portfolio. And you can support whoever you want.
Sure.
But we'll still look at those categories of analysis to try to make the best acquisition within that context.
Okay.
The second thing I would say from, the undiscovered artists, I mean, let's look at the artists, a lot of the African-American artists. Let's look at Alma Thomas. Let's look at, even Ed Clark. I mean, there are artists that 20 years ago, we knew they were important, but there wasn't a lot of attention paid to them. So yes, that can happen where there's an overall movement and development and interest level that can change the way we look at certain artists. But all of the artists I just mentioned still were very substantial within the time when they, were very active in the 60s and 70s.
Okay, wonderful. Let me go through the couple other questions and then we'll move on. Harry, which I want to say hello to Harry. He's asking the question, what is the effect of lending a piece to an institution? What's the effect on the value of such a piece? Can you talk a little bit about that?
Of course. I am going to actually mention lending also from a tax perspective in a few minutes.
Okay.
But so first of all, let's have a reality check. Institutions are not really, a lot of exhibitions are on hold right now. People aren't necessarily going to museums right now. There's a lot of backlog. So let's just start with that kind of sad news. But let's say the world was back to normal. I have a lot of clients that will say to us, we want to place this in exhibition. All exhibitions are not equal. Remember, I mentioned the Tate having a retrospective of Hockney, or Georgia O'Keeffe. There was also a major retrospective, or the Warhol retrospective at the Whitney. Like, those pivotal exhibitions can have a huge impact on value. However, when we have clients that don't want to pay their insurance, so they decide they send a Diego Rivera to an exhibition in Spain and some random museum, it has zero impact on value, but it can save you some money for insurance. In addition, if you're interested in selling, sometimes people see those works and, they can see them in person. And so there are a lot of advantages. So it has to be the right exhibition, not just any exhibition.
Okay. Another question, value difference between a living and a dead artist. It wasn't one of your criteria, but obviously there's no more supply from a dead artist. That's a question. So any comments around that? I think that's.
So valuation, every object has 4 values. So the first problem always when you say the word value is, what do you mean by that, right? Okay. Value can mean, what do you pay for insurance? So an insurance value for a living artist and an artist that has passed is very much based on what the gallery price would be. So that artist we mentioned earlier, the abstract expressionist, actually she would have a higher insurance value because you have to replace the work at a gallery. The second kind of value is fair market value, and that's portfolio value, asset value. Now I can address it if we're talking about fair market value. For an artist that is a living artist, that artist can still have a very, very strong asset value and can be as strong as an artist that has passed. It's not about living in death. It's about how you change the development of art history, who represents you as a gallery, and your secondary market. So there are living artists today that have very, very, very strong markets. Okay. Yes, they can continue to produce, but they also might have a period where their production creations within a certain context are the most important in how they've been seen as kind of part of the movement of art history. Okay. So like that.
To move along, there's one more question around this and one more that I think you'll address a little bit later. The question right now would be, how does one, and this is from Jerry, how does one navigate these categories when collecting an artist in depth?
Yeah. So these categories, so there are 2 things to say about this. One, when you start collecting an artist, in my opinion, most people do it the wrong way. What they typically do is they've started collecting, they don't have a lot of money, they're kind of afraid to get their hands caught in it, so they buy the worst examples of the artist because these are the least expensive. Or they buy things that have gone unsold, or they buy things that galleries are just trying to pawn off on them. That's the wrong way to collect. The right way to collect is have an academic understanding of the artist within the development of art history. And then buy the very best you can afford first. And as you become more sophisticated and as there's depth to your collection, then you start looking at the early period. Or, so I'll give you an example. You know, a Rothko collector, as a good example, you know, would, you know, if I was helping a client acquire Rothkos, I would say, we need to buy some pivotal works. You know, this is after a lot of academic analysis. This is after, you know, seeing lots and lots of examples. And then at some point, you're going to want to collect his surrealist period. Will it have great value? Not so much. But in order to really collect in depth, you have to understand the work he did for the WPA. You have to understand his surrealist period. So you need to, you know, have examples of oil on canvas, but you also want, you know, works on paper laid on board. But you want, so the depth should start with, why is that artist important? And understanding that, and then pivoting out to, you know, different points and developments in their career.
Perfect, thank you. And the question, so you remember this while you go through the presentation, that Joshua Bernstein asked is curiosity around reliable art value indices that track values over an extended period of time. So with that, I'll let you please move on with that. No?
I would say that is something I could address right now, simply
Perfect.
because we're talking about value.
Mm-hmm.
Here's the problem, and here's the solution. Art indices, in terms of finding out value, they can look at, for instance, take an artist. We'll go back to Rothko. You know, Rothko painted quite a few works utilizing oil, right? Fine. The art indices will then look at every oil painting sold by Rothko in the auction marketplace. There will be no nuance. They won't look at paper laid on board. They won't look at the quality of condition. So while indices are incredibly helpful for looking at kind of large analysis, without that sophistication of understanding the nuance, you really can't understand an artist market. Do you understand what? So Josh, you can ask a second question if you want further on, but that's kind of my quick answer.
Perfect.
Okay, so let's just take a quick look at some of the financial instruments that have emerged over time. And I've kind of divided them up into kind of different categories. The first is that collector investor. And I think a lot of the people that I'm talking to today are collector investors. Most of my clients are collector investors, but not all of them. Collector investors are essentially people that want to, one, they're collectors. They want to live with the artworks. They want to see the artworks. They want to collect. They want to be part of that process, but they would like the works to have a baseline asset value, which with the goal of it being kind of a larger part of their portfolio legacy. Okay, that's the collector investor. And for the collector investor, it's quite simple. You buy works of art that are asset works of art. They have a B+ rating or higher. Deep market analytics are done before every single acquisition, right? You never take anyone's word as the correct. I mean, think about your own business world. Would you ever buy a business without doing full market analytics, right? So you want to make sure those analytics are done, which look at comparables and condition and kind of lays out what the true value is for that work. And you may, if you are acquiring in the private realm, gallery realm, you need to be able to negotiate and know what the negotiation baseline should be. And for auction, you need to take emotion out of the experience, right? Now, auctions rely on emotion. So, you know, for a lot of our clients, they do not show up on, you know, we do all the bidding for our clients. We tell them when you must stop or you are leaving market value, right? So, you know, one kind of collector is that collector investor, and you can completely have a collection that is a strong asset value that will grow over time if you follow these rules, right? The second kind, something else I wanted to kind of talk about is, what is this guarantee that many of us have heard about but may not understand? The guarantee is a strategy, and it is best for a collector investor. So this is a collector investor strategy. The reason I say it's best for a collector investor is because it's a third-party guarantee at auction, is because you may end up with the work. So if you end up with the work, you're going to want the work in your life, because once you acquire a work, we recommend you hold it for a minimum of 5 years. So this is a work you're going to live with. However, it can be a very profitable financial instrument if it's done correctly. Now, I would say many people do not know how to do a guarantee. So let me tell you how you can do a guarantee correctly. The first thing to understand is, what is a guarantee? A guarantee is essentially an opportunity to acquire a work at an auction house, and you basically have given them a pre-guarantee of a price you will pay no matter what. So before it goes to sale, they already have a guarantee that you would acquire it if it does not achieve above a certain threshold. So I'll give you a quick example. Here's the Kandinsky. Oh, I love Kandinsky. So here's a Kandinsky. The estimate is $15 to $20 million. Now, the first thing you want to think about when there's a guarantee is it estimated correctly? Many auction houses will lure in a work with high estimates, or clients who want to sell will stupidly require high estimates. When you have a high estimate, and the only estimate that actually matters is the 15 million. 20 million means nothing. It's actually there just to like give buyers some sense of range. Only the 15 million means anything. So if the low estimate is 15 million, you want to make sure that 15 million is going to galvanize interest. If it's not going to galvanize interest, the dealers will turn away and not bid. And if the dealers don't bid, the individual collectors probably won't bid, because that's not a good sign. There'll just be quietness in the room and the thing will die. So you want the estimate to be low in order for the guarantee to be a good financial instrument. Now, you also want to have a third-party appraisal so you understand what that true value is to see if you're going to make money. So the way the guarantee works is an individual says the following, and also note, you can't call up Sotheby's and say, hey, I want a guarantee. They're very picky about who they offer the guarantees to. So, for instance, we work very closely with the auction houses, and they prefer collectors to dealers. So we will tell them the areas where we have collectors who specifically want to guarantee specific artists, and then we will have that opportunity. So let's say you have the opportunity for this Kandinsky. The estimate is 15 million. We have determined that that is a good estimate, meaning that we do believe it will go for more. The true value is somewhere closer to $20 million. If that is the case, then what you would say, working through someone like us or someone else, is say, you know what, we would like to guarantee the work at 15 million. Now, let's talk about why that's important. Today, with COVID, a lot of sellers are very afraid of selling, because they're afraid the work is going to go unsold. And if the work goes unsold, they have a burned work. And if they have a burned work, the value goes down dramatically, and they have to hold it for a minimum of 5, maybe 10 years. So you want it to sell. A guarantee allows a seller to know no matter what, $15 million is going in their pocket. Doesn't that feel good? Now, here's where the financial opportunity happens. You basically negotiate in advance. If it sells above the 15 million you have guaranteed, you will get a percentage of the upside. So as an example, if the estimate is 15 million and you've said you'll pay 15 million if no one else bids on it, but then let's say that it sells for 20 million. If it sells for 20 million, you take the differential between the 15 and the 20, and you get 20% of the upside. Understood? So it's a great opportunity. It is not a great opportunity if it's not estimated correctly, or if you are not happy bringing it home. We worked with several clients on guarantees in the last sale, and made them a significant amount of money. But again, not every work is good for a guarantee. While we're there, I'm going to talk about fractional interest. So fractional interest, there's another term for fractional interest. Art club, art fund, a bunch of guys and gals getting together and buying something together, or family fractional interest. Now, let's start from an appraisal perspective. If you have a family, the Smith family, and they fractionally own together a Warhol painting at $10 million, and everyone has 1/3 of $10 million, this is just totally unrelated to financial. This is from the trust and estate perspective. What fractional interest allows you to do is lower the overall value of the painting. The reason is you can't cut an Andy Warhol into 3 parts. As a result, in order to sell, all 3 parties have to agree. Therefore, that depresses the value of the work. And therefore, from the estate planning perspective, you can put, like a company like ours, can put a lower value on a fractionally owned object. So that's like a totally separate thing. That's from a planning perspective. From an acquisition perspective, you do still have that kind of everyone has to agree to sell scenario, which can be problematic unless one person is, running the ship. But it is a way to buy a higher quality work if you've done all your due diligence and all your market analytics, because the higher the quality work, the better chance it's going to increase over time. So if you only have $500,000 to invest in a work, and you have 2 other people who can put in $500,000, a work at 1.5 million, again, meeting all that criteria, has a better chance of increasing in value over time than a lower value work. So that's the opportunity from a fractional perspective. But you have to have the right person driving the ship, or you're just buying, you're going to get yourself into trouble. The other approach would be like a formal investment fund model. These are just example of 3 of the funds that are out there. They're mostly Chinese funds, but there are American funds, British funds is an example of an Italian fund. And basically from a fund model, it really is there's an investment perspective to it. You have an investment advisory board who determines the investable amount. There's usually they raise money in advance, and then once they have the money, then they go out to buy. Typically, most funds like to buy, and I like to buy this for my clients as well, work somewhere between, this is my advice. If you're going to a fund, you really want them to buy between $1 million and $3 million per work. It's kind of the safety net price point for good works, and everyone's kind of searching for those works. But again, my issue with the funds is who's doing the buying, why they're buying, and how do they get paid. And they typically get paid somewhere between 1% and 3% of the overall value of the fund. You have to hold typically for 5 years. And after 5 years, that usually when there's a liquidation opportunity. Do not, under any circumstances, invest in a fund that only buys emerging artists. That is risk, risk, risk. So if you want to throw money in the toilet, I do recommend that. But if you have to go with a very conservative fund. You want to make sure they have a very conservative due diligence model, and make sure that the artwork they're providing is not owned by any of the members of the fund. It's a great way to get rid of some of your artworks, and has been done before. Any questions about the funds before I proceed? And here are 3 kind of decent funds that are out there. I put the fine art groups the most conservative. Any questions there? Okay.
There's no questions. You can move on. And we have about 5 or maybe, and then if you have some, okay, good.
Yep. That's where we are. So the other thing is to think about liquidity. What do you do with the artworks you have? And I always think about everything from a planning perspective. And all decisions about your art is based on value. If you don't understand value, you actually can't strategize. If you have artworks that have increased in value, and selling them would lead to capital gains. So for instance, the 1031 exchange is null and void with the Trump tax law in the United States, as an example. So you were able to buy and sell, and there'd be no capital gain. Let's say you have artworks that have really increased in value. You can leverage that value with some liquidity. And one way to do that is through either a recourse or a non-recourse loan. A recourse loan means through your bank, and you all know what that means, right? So the artwork is just like icing on the top. They're looking at your entire portfolio, but the terms will be quite good. It's typically 50 or 60% loan to value at usually marketable cash value, which is a value I haven't discussed with you, which is basically hammer price at auction. And you can get a really nice loan. It can be renewable every year, and your bank can help you with that. The other option is a non-recourse loan. And there are a lot of companies that do non-recourse loans. And that basically means they only look at the artwork. Now, they're looking at artwork with strong secondary market. So if you have emerging artists, forget it. If you have artists with very little secondary market, forget it. You need to have artists with a good secondary market. And the non-recourse loans also tend to be about 50% loan to value. And they don't care about anything else in your portfolio but the art. And the loan will be made specifically on the art. And it's a great thing if it's increased in value and you don't want to pay capital gains to sell it. The last thing I want to talk about is taxes. And there are two kind of ways to think about it globally and another in the United States. One of the big issues in the US is we have something called use tax and state tax. There was a Wayfair decision, Wayfair, the company, a couple years ago, essentially that states you don't have to have a brick and mortar in a state in order to be considered a business in that state. So for instance, Sotheby's now may not have a brick and mortar location in Nevada, but they still have to charge you state tax. So state tax can be very expensive. In California, it's 9%. So if you buy an artwork at $10 million, you're going to pay the state of California $9 million, 9% in tax. So one of the things we can do is our clients, when we buy them, they automatically go to tax-free storage in Delaware, New Hampshire, Montana, Oregon. If you send it to tax-free storage, you've avoided the state tax. Then they hit you with another tax called use tax, and that's first use tax. The way to deal with first use tax, and again, I'm not an accountant, so I'm not giving accounting advice, I'm just telling you what my clients do, is we can have it exhibited first use as a cultural object in a museum. We can have it exhibited in a museum, or if you have a secondary home in one of these locations, they can be hung in that secondary home for a minimum of 90 days. That eliminates both use tax and state tax. And for clients, that can be a very important planning strategy. Now, in terms globally, many of you are aware of this, are the other tax-free opportunities in terms of the same scenario, right? So Geneva, Luxembourg, Hong Kong, Singapore, I said Geneva twice because there are two locations in Geneva, and the United States, of course. So that's the other opportunity, is looking at some of this tax-free storage facility. It is only useful to you if you're an investor. And basically it goes to tax-free storage. It's sold within the storage facility to the buyer, who moves it from one section of the storage facility to another section of the storage facility. So for people that are interested in acquiring works for investment in the United States or abroad, you can put them in tax-free storage and literally send them out to exhibition, bring them back and sell them within storage facility. And it saves a tremendous amount of taxes. Okay, so final words of wisdom. The first is, and I can't stress this enough, due diligence. Do not be lazy. Do not take the word of anyone who tells you anything about the artwork unless you've had a third-party analysis of what you're doing. So due diligence is absolutely the most important thing. Buy the best you can afford. Don't start with the least expensive because you're dipping your toe into it. Instead, figure out what you want to buy, do all the due diligence, and pay the right price. It's the best chance of getting your money back and increasing value over time. Avoid a portfolio having an emerging artists. However, if you do love emerging artists, you still have to do categories of analysis, museum, exhibition, collectors, all the parts that I mentioned before. Be prepared to hold anything for 5 years. And longer is better, depending on the market. There may be a moment where, like I mentioned, a major exhibition and there's a big trajectory up. We saw it with Sam Gilliam as an example. So, keep that in mind. And here's my favorite. If it's too good to be true, it absolutely is too good to be true. If the price is too low, if the deal is too quick, run away as fast as you can. That's it for today.
Hey, Anita, there's one question from Richard. And if you have a couple more minutes, do you have 2 or 3 more minutes?
Sure.
Yes. So if anyone else has any burning questions or we want a tweet response from Anita, please send them right now. Richard's asking, can you buy art with non-recourse loans?
So what we do see is that people will they'll take artwork they have. This happens all the time. I mean, Sotheby's started with advances. They would give advances on a sale, right? So what you can do is you can get a loan out on your objects, and then you can use that to buy another work. We see that all the time. So certainly you can do that. Yeah, the answer is yes.
Okay. I don't think there's any more questions. So with that, I think we should be closing and respectful of everyone's time. I thank first of you, Anita, for the 2 great sessions. We're going to be posting this in the YPO Art Network board. And for those members that are interested in also joining a chat, please send me a message and I will incorporate you into a WhatsApp chat in which I'm also posting these conversations. Thanks for everyone for attending. And well, there's one last question as we're closing. It almost feels like a Hail Mary, no? So I'm gonna do it just for the sake. Tax avoidance. Can she explain the strategy again about purchasing works and hanging them in a second home? Can you talk a little bit about that and we'll close?
So again, I'm not an accountant, so I'm not giving tax advice. So let's start there. I'm only telling you what my clients tend to do and some strategies we use from a collection management perspective. So essentially, let's give a specific example. You acquire a work of art for $1 million in New York City at Sotheby's. Okay, we're all together there. You live in California, dread of all dreads. I do too. What you would typically do is take that artwork and ship it to California. And again, you have to ship it with an official shipper. It has to ship directly from Sotheby's. They need to arrange shipping. Don't send it to conservation. Don't send it to framing. It must go directly from Sotheby's or Christie's or wherever. They need to arrange the shipping. That's very important because all of that can have tax ramifications. So if you're a California resident and you think, oh God, once I send it to California, now I'm going to pay 9%. Sadness. You know how much money that is. You have an alternative plan. The alternative plan would be the following. If you have a home in any of those states that I just mentioned to you, you can send it to that one of those states and they can hang there for a minimum of 90 days. And because they are tax-free states and now the first use tax means you've hung it in a home to display because it's a piece of art, you've solved the problems of the use tax and the state tax. And as a result, you will not pay the 9%. Your other alternative would be to take that work, send it to a tax-free state like Delaware, like Oregon, and exhibit it, first use, to be displayed it as the purpose of its cultural use at a museum for no less than 90 days. And now you have solved the use tax and the state tax scenario. All of our clients of a certain girth who acquire certain pieces, we arrange that opportunity for exhibition.
Okay. And Shu has asked the question that I also had to ask you, which is, what's that painting that you're hanging out in your back? What's that?
Alfred Maurer was one of the Ashcan school. He was there was a very important exhibition in America. It was the Armory Show when all the great kind of American painters at the turn of the century exhibited. So every painter of the Ashcan school became kind of the fundamental painters of American modernism. Maurer lived a very short life, and he was known for his Fauves paintings. He studied in Paris and in France, and then of these sisters that are all flappers. And then he died a horrible death, suicide, and really died in his 30s. And his father was also a great painter.
Wow. Well, good. Thank you again, Anita, and thanks everyone. Everyone have a fantastic Tuesday, and hopefully see you soon again. Ciao.
Thank you all so much. It's been a pleasure.
Thank you. Bye-bye.